Most Nigerians in this market today are not investing, they are reacting to hype, reacting to fear, reacting to WhatsApp broadcast. They know the stocks, but they don't understand the system, and that's why the market keeps surprising them over and over again. But today that ends, because in this video I'm giving you the blueprint I wish I had when I started, how the Nigerian stock market really works behind the scenes, how smart investors spot opportunities early, the traps that quietly drains beginners, and how to build a portfolio that survives inflation, FX shocks, and policy changes. If you understand what I'm about to teach you today, never invest in Nigeria the same way again. Hello my colleagues, welcome back to the channel, and if you are new here, you are absolutely welcome. This is a full system breakdown of the market you are investing in. Before we continue, please smash the like button so more Nigerians can find this video to gain clarity and also learn like you. Subscribe to the channel if you haven't, and join my WhatsApp channel using the link in the description and pinned comment. That's where I share my real-time research before it ever hits YouTube. And without much talk, let's jump right into today's video. Let's go. Before we talk about strategy, before we talk about picking stocks, we need to face the part almost nobody on YouTube actually explains, because the Nigerian stock market is not the US market. Our market is a different beast entirely. In the US, stock prices move because of earnings reports, inflation, data, Fed decisions, and institutional flows. But in Nigeria, prices move because of regulation, government incentives, liquidity waves, FX pressure, CBN policy decision, and simple market microstructure. Who is buying, who is selling, and how much volume is available. This is why the NGX can be the best performing market globally in January and one of the worst performing by March. Not because companies change fundamentally, but because the environment changed. And here's the painful truth: most beginners who enter the Nigerian market get trapped because they treat it like the US market, if I may say. They chase bombs, buy because Twitter is shouting, panic sell during volatility, and follow rumors instead of data. They ignore liquidity, they ignore policy, and overestimate their risk tolerance. Then the market humbles them. Not because they are unlucky, but because they are uninformed. The Nigerian market is both a wealth creator and a wealth trap. If you understand how the market actually works, the rules, the incentives, the cycle, the behaviors, you can grow wealth quietly and consistently. But if you don't, you will chase rallies that insiders started buying 6 months earlier. So before we move into the frameworks and strategies, I need you to understand this basically. Nigeria is not really a stock pickers kind of market. It's a system market. Once you understand the systems, picking stock becomes 10x easier. To truly understand this system, you need to understand the engine behind it. Because here's another thing nobody tells beginners: you can't win in the Nigerian market if you don't understand how the market itself actually works. Not the theory, not the hype you see out there, the engine itself, the machine behind every share you buy, every price you see, every rally that happens, and every why is this stock not moving. Because you see, this our market, it has rules, it has a structure, it has a machine behind it. And trust me, once you understand this machine, guys, you understand why some stocks fly. So let's break down this machine piece by piece. First, we have the NGX. The NGX is the marketplace where all others meet. The NGX is not your broker, it's not your app, it's the matching engine. When you click buy, your order enters the NGX book and gets matched with someone willing to sell. If no seller exists at your price, your order does not execute. Simple. So you don't buy from your broker, you buy from another investor through the NGX. Now the question now is, where do your share actually stay? That's where CSCS comes in. CSCS is like the banking vault of the Nigerian stock market. Your shares do not sit inside your broker, they sit with CSCS under your name. Even if a broker goes down today, let me say Trove, Bamboo, and the rest of them, even if they go down today, your stock remains safe at CSCS. Your broker is just the interface, CSCS is the custody. Now let's talk about the people connecting you to the NGX, which is these same brokers. So basically there are two types of brokers in Nigeria. There are tier 1 brokers, the likes of Meristem, Cardinal Stones, AfriInvest, Stanbic IBTC, AROM, Chapel Denham, United Capital. There are many of them. These guys are your brokers. They connect you directly to the NGX. You get cleaner execution, deeper liquidity, and fewer outages. And then you have your app brokers. These are beginner friendly apps like Chaka, Trove, Bamboo, RiseVest, Cowrywise. These are apps that basically interface with some of your brokers and then help you now interact with the NGX. These kind of apps have beautiful UI, but most of them, like I said, route your order through a a tier 1 broker. That means they are usually slower in execution and you get to have more pending orders and sometimes difficulty filling illiquid stocks. When you want to exit an illiquid stock using these apps, sometimes it can be difficult. For people that have 10,000 to 500,000 naira, apps are okay for you. But if you are investing more than 500k, 1 million naira basically to 50 million naira and above, tier 1 brokers gives you fewer headache. But again, even the best brokers cannot save you from the biggest trap in this market, which is liquidity. And this is the real reason you get stuck in losses. Some Nigerian stocks have deep liquidity. Example, GTCO, Zenith Bank, Access, they have deep liquidity, while some of them are illiquid stocks. For the liquid ones, you can enter and exit easily, but many stocks, which are the illiquid ones, have zero volume for days and only 1 or 2 trades and huge gap between buyers and sellers. If you buy them, you might not escape when you need to. Low liquidity turns your portfolio into a cage. The next thing you need to understand is market depth. Market depth simply shows how many shares buyers want, how many shares sellers want, and at what price. If buyers are strong, prices rises. If sellers are strong, prices fall. If both are weak, the stock sleeps. It does not really move. So this is why stocks move slowly until volume hits. By the way, in the Nigerian stock market, stocks cannot move more than 10% in a day, meaning it can only rise gradually, and it cannot also lose more than 10% in a day, and that's if there is heavy selling. So this rule protects the market from chaos. So even if everybody wants to buy Seplat today, the price won't just boom go up immediately like 50%. No, it goes up gradually, 10% today, 10% tomorrow, until it reaches the full price that brought in that volume of buy order. I believe you now understand this engine to an extent. Now let's move into how to buy shares in Nigerian companies, the way smart investors actually do it. And the first step is simple. You must choose the right bridge into the market, and the right bridge is your broker. Your broker, like I said earlier in this video, is what connects you to the market, which is the NGX. If your bridge is weak, it collapses the moment the market becomes volatile. So here's how to choose a strong broker. The first thing you want to look out for is execution. When you click buy, does it fill immediately, or does your screen just say pending while the price is running away? If your orders don't fill quickly, you are already losing money before investing. Then we have liquidity. Some brokers connect directly to the NGX. These are tier 1 brokers. Others route your order through another broker. These are the apps we mentioned earlier during the course of this video. So the deeper their access, the better your order feels. Another criteria for choosing a good broker is customer support. When something goes wrong, and trust me, if you actually go wrong, can you reach a real human being to handle your problems with your brokerage firm? If your brokerage firm's support is not really good, then you might want to consider changing your broker. Now, the big one when it comes to choosing a broker to use in investing in the stock market is transparency. Good brokers tells you exactly what the fees they are when you want to purchase a stock. Bad brokers hide their fees inside spread. And here's what that actually means. A spread is the difference between the price you should get a stock and the price the broker actually gives you. So for example, the market price for a stock could be 40 naira per 1 share. The broker can decide to sell you that same stock at 40 naira 70 kobo. That extra 0.70 kobo is not a market movement. It's a hidden fee. You didn't see it, you didn't approve it, but you paid for it. This is why transparency matters in the game of choosing a broker or help you invest in the market. So now that you know how to choose a broker, let's touch on the documents you need for opening your brokerage account in order to start investing in the market. The first document you need is your BVN. Then you need your ID. You can make use of your national ID card or your international passport or even your driver's license. The next is your utility bill. Then you need a passport photograph and then your signature. Your signature can be in a white paper or in a transparent background. Traditional brokers might require you to fill a physical form and then you scan it and then submit back to them. But most of them have their forms online that you can fill and submit, and they will process it for you within 24 to 72 hours. For me personally, as of the moment of making this video, I make use of Norrenberger for my stock investments, but I actually do have plans to switch from them because I've not been enjoying their service as much lately. And you are likely to see the brokerage firm that I use when I drop a video on the top brokers to use in 2026. If by the time you are watching this video, that video has been dropped, you can click on the card above to go watch that and then come back to finish up this video, because the next section we are covering will help you know the type of investor that you are and then how to spot good companies that can actually make you money in the Nigerian stock market and also in the US market or any market you want to actually invest into. Let's move into that next. Now, starting with figuring out the type of investor you are. You see, most Nigerians don't lose money because of bad stocks. They lose money because of a bad strategy personality mismatch, meaning they pick a style that does not match who they are, how they think, or how they react to market pressure. And no matter how good the stock they decide to invest in is, they still lose money. Now, to solve this problem, we need to talk about who you are as an investor. And basically, there are 4 types of Nigerian Nigerian investor. You have the dividend seeker, which is the first type of Nigerian kind of investor. This investor type is simple. They want peace of mind, they want stability, they want cash flow. They don't care if the stock doesn't pump or not. They just care about dividends, consistency, strong banks and blue chips, and long-term compounding. If you enjoy seeing alerts every quarter of the year and you hate stress, this particular type of investor archetype might be for you. But some people don't actually care about dividend at all. They care about buying undervalued companies and holding until the rest of the market wakes up to that. I think I'm that kind of investor. This actually takes us to the second type, which is a value stroke fundamental investor. This investor loves reading annual reports, earning results, balance sheets, trying to understand and see if a company is undervalued. They buy when others are afraid and then they wait patiently. They love companies like Dangote, Geregu, Okumu Oil, banking stocks that are trading at a discount. Now, this style works beautifully, especially in Nigeria, and that's if you have patience, because value plays don't always move immediately. Now, some people hate waiting. They want speed, they want momentum, and that brings us to the third type of investor archetype, which is the growth, or you can call them momentum investor. They ride the wave. These are investors who love trends, they love narrative shifts, and they love when volume starts building for a particular stock. They move fast, they ride waves. But it requires discipline. You must know when to exit, you must understand liquidity. If you struggle to follow rules or you panic easily, momentum is not for you guys. Finally, the last kind of investor archetype we have in Nigeria is the speculative trader. They're also similar to the momentum investor, but the momentum investor most of the time has more patience than the speculative trader. Now, this type of investor archetype, they don't care about fundamentals. They just chase rumors, they chase news, they like penny stocks, and they like high volatility kind of stock. Sometimes they can win big, but sometimes they even lose bigger money. So this style only works for you if you have risk tolerance, are using small capital, and you understand liquidity trap. And again, you accept volatility as normal to you. Most beginners actually think that they are momentum investors, but in reality, they are just speculative traders without knowing it. And that's why they lose money. So once you understand your investment archetype, you stop copying random strategies from Twitter or WhatsApp. You invest based on who you are, not who the market is shouting about. Before you progress into the video, I want you to take a moment to reflect about the kind of investor you are before we now go into the next important type. Now take a minute to reflect. Let's continue. So now that you understand your personality, it's now important for us to know what are the things that you need to check when trying to find a stock to invest in that could likely make you some back. There are 7 important checklists for evaluating any Nigerian stock. There are other issues that you could use, but these particular issues can help you make informed decision. The number one thing you must check before buying any stock in Nigeria is the earnings. Now you need to ask yourself this question: has this company been growing earnings consistently or not? So you want to look for rising profit over 3 to sometimes 5 or even 10 years. The next thing is, do they have stable margins? Profit margin 10%, 20%. This is very, very important. And then you want to also look for consistent revenue growth. Why does this matter, you may ask? You see, in Nigeria, inflation, FX, and policy changes will test every company. Only companies with strong earnings survive long term. If earnings are unstable, the price will eventually reflect it. But hey, my colleagues, earnings don't stand alone. Some companies grow earnings yet still collapse because of excessive debt, and that's the second thing you want to check for. Now see, debt is not the problem, bad debt is the problem. Before buying any stock, check, does the company borrow in naira or dollars? Can their cash flow comfortably service their debt? Are they exposed to FX losses? Is their debt growing too fast? Many companies look profitable until the naira devalues, then suddenly they become naked. You start wondering, was this not the company that was busy posting high earnings previously? Most of the time, what now causes this distress is when their dollar loans balloons, interest expenses explode, profits now disappears. This is where many beginners now get trapped. So if a company has heavy dollar debt but weak dollar income, you might want to reconsider investing in that company. Now it is worth knowing that even a company with great earnings and low debt can still fail if management is poor. And that leads us to the next thing to check, which is management quality. And this is the invisible reason stocks fail or succeed. You see, in Nigeria, management is everything. So you must check, are they transparent? Do they deliver on guidance? Do they pay dividends consistently? Are their decisions long-term or emotional? Do they communicate clearly with investors? Bad management can destroy a good company. You also want to look at the track record of the CEO or anybody running the business. Good management can revive a struggling one. This is why banks like GTCO and Stanbic keep winning, because management is excellent. And speaking of management, we need to talk about who truly controls the company, which is also the number 4 on our list: ownership structure and insider behavior. Before you buy any stock, ask who really owns this company. You want companies where insiders own meaningful shares, ownership is stable, major shareholders are long-term minded, and most importantly, check insider buying and selling. If insiders are buying, you want to pay close attention. If insiders are selling aggressively, ask questions. Ownership structure is like X-ray vision. It shows you what insiders believe about the future. But people alone don't carry a company. The company must have real strength. You can even go ahead to say the fifth thing you want to check is the strength and competitive advantage of the company. You see, some companies are loud, but they don't have any real moat. And that's why one of the best investors in the world, Warren Buffett, always looks for companies with moat. Before buying, ask what makes this company hard to compete against. Do they have pricing power? Do they dominate distribution? Do they own infrastructure? Are they in an essential sector? A company without a competitive advantage is just a placeholder waiting to be knocked out. Even a strong company can suffer if the entire sector is in trouble. So before you go ahead to check the final thing you're going to be going over next, you want to check the moat, or like a competitive advantage of the company you are considering investing in. The sixth thing you want to check for is the sector risks, because in Nigeria, sector is greater than company. Banks behave differently from consumer goods. Oil and gas behaves differently from industrial. So before buying any stock, you need to study the sector cycle. Is regulation tightening or loosening? Is FX favorable to this industry? Is demand rising or falling? Is this sector supported by government policy? In Nigeria, government policy can lift an entire sector or punish it overnight. Don't fight the sector cycle. Now, even if all these 6 points or checklists look good, there is one final check that can save you from losses, which is liquidity, the difference between wealth and stress. This is the one that actually destroys most beginner investors in the Nigerian market. The stock can be profitable, well managed, growing, undervalued, but if it has no liquidity, you cannot exit. So liquidity determines how quickly you can buy and how quickly you can sell a particular asset, whether you get your price, whether you get trapped. If a stock is thinly traded or always on full bid or full offer, you want to japa, run. In Nigeria, liquidity is part of analysis, not an afterthought. When you combine your investor personality, the engine mechanics, the right broker, and this 7-point checklist, you are no longer investing emotionally. You're investing like smart money. So guys, now that your foundation is very strong and tightened with my spanner, I'm going to be helping you properly structure your portfolio, and I'm going to be doing it like me and you are building your portfolio together right now, step by step. So now, for construction of your portfolio, if inflation is 25% and your portfolio returns 10%, you did not invest, you lost money, but this time around quietly. So for you to win, you must build your portfolio using a structure that is both inflation proof and balanced against currency and policy changes. We can make this more practical by structuring your portfolio based on the size of your capital. Now, this is the portfolio structure for those investing between 100,000 to 300,000. So if you're investing in this range, you want to hold only 3 to 5 stocks. At this size, adding too many positions actually dilutes your capital. So each position must be strong enough to move the needle. You need meaningful gains and liquidity must be strong. Now, the perfect structure is one bank for stability and high interest rates returns, one industrial or consumer goods for local demand and inflation pass-through, then another one energy or FX hedge to protect against naira devaluation, and finally another one which is optional for growth or speculative play. You want to take some big risk as well. Example could be GTCO plus Dangote plus Total, and then another growth stock like Charms, Elalix, one of those speculative stocks. I would say Charms is not listed as speculative as Elalix, but this is an example, by the way, not a recommendation. Now, if you have between 300 to a million naira, you want to now hold between 5 to 8 stocks. Now you can diversify without watering down returns, adding crucial policy protection as well. So your structure could be 2 banks for broader financial sector exposure, 1 industrial core infrastructure play, example could be in the cement sector, and then 1 energy or FX hedge, and then 1 consumer goods that brings in strong cash flow and pricing power. And you can also go for 1 or 2 speculative positions for higher growth potential. Example could be GTCO plus UBA plus Geregu plus Total plus Flour Mills plus Elalix. Let's move over to the next portfolio structure, which is for those with a capital of around 1 million to 5 million naira. Now with this portfolio, you can have between 8 to 12 stocks, but I would say 10 makes the most sense. So your capital is now enough to spread properly across different economic cycles and risk. For the structure, I would say 2 to 3 bank stocks, 2 industrial, 1 energy, and 1 to 2 consumer goods, and finally 1 dedicated FX hedge and 2 speculative stocks. Now if you have between 5 million to 50 million naira, you can now talk about holding between 10 to 15 stocks. By the way guys, I'm considering making a much more deeper dive into this particular section of the video. If you want to see that, please just comment something about that, and if I say enough comments, I'll consider making a dedicated video video for this specifically. Now into the structure for those with this capital range of 5M to even 50 million naira. Like I said, your structure could be 3 banks, 2 industrial, 2 energy, 1 FX hedge, 1 income focused stock, and 1 to 2 speculative stock. Now when building this structure, remember to always concentrate 40 to 60% of your capital in highly liquid stocks like GTCO, Zenith, Access, MTN. So this form the stable backbone of your portfolio, ensuring you can exit quickly without begging the market. Now everything we have done so far gives you the framework. You understand the engine, you understand how to pick brokers, you understand how to evaluate stocks, and you now know how to actually build a Nigerian portfolio the right way. But here's the truth, guys. Even the best strategy is weak if you don't have the right information sources. In Nigeria, information is not evenly distributed. Some people see opportunities early because of the tools that they use. Other people see it late because they are depending on rumors, WhatsApp channels, WhatsApp groups, and screenshots. So before you start investing with confidence, you need to know where to get clean, accurate, fast market information the same way professionals get it. Now let me show you the tools that gives you a real edge in the Nigerian market. The same tools I personally use every single week for my research. The first tool you need is the NGX sources. This is your primary market eye. The NGX is the first place every investor should be checking. Not Twitter, not Telegram, not blogs. The source. Their website is ngxgroup.com. Now here's what to check on their website. You want to check for the top gainers and losers. This shows you where volume is flowing. Then you want to look for the market-wide reports. Market report, which gives you weekly summaries and sector movement. You also want to look at the ASI performance. It tells you if the whole market is going up or selling. And you also want to take a look at the corporate disclosure part of the website. Here you get to see company news before it hits social media. If you understand these 4 sections alone, you will never be surprised by market movement again. Professional investors in Nigeria particularly live on this particular website. Beginners ignore it and pay the price. Second thing you want to look out for is company reports. This is where the truth of a business live. In the company report, you get the real earnings, the real debt levels, the real management commentary, and real risk and opportunities, not rumors but the facts. My favorite source to get company reports is allafricanfinancials.com. Here you get clean PDFs and years of data and consistent formatting. If you want to know whether a company is growing or struggling online, the annual report will give you that information. Then the next thing you want to look out for is insider dealing reports. You want to follow the smart money. If you want to see what people who work inside the company are doing, you always want to look for insider trading disclosure. You can also get that on the NGX corporate disclosure part of their website. Here you see director buying, director selling. You even see most of the workers who are buying and selling their shares. Sometimes insider buying can be a clue into maybe future profit, expansion, new strategy, or just overall confidence in the performance of the business. So when insiders are buying consistently, you really want to pay attention. When insiders are dumping aggressively, you should start asking questions. And like I said, you will find this on the NGX corporate disclosure section of the website. And finally, this is something that's much more personal to me, a tool that I'm building to help most of you solve the problem of trying to read a financial statement or even track your portfolio, which is Affymetrix. This is a tool that will save you tons of time trying to understand or read a company annual report, or even trying to see how your portfolio is performing overall. With Affymetrix.com, you can see market performance clearly, you can track your portfolio, understand financial health of a company at a glance, monitor sector strengths, and catch opportunities early. This tool will help many investors in Nigeria make money come 2026, and that's why you want to go now to the website Affymetrix.com and join our wait list. And you want to join the wait list because the truth is that when a tool like this launches, people that capitalize on it early are those who make the most money. And thankfully, it's a tool I'm building not just for myself but for my community as well. So join the wait list so that you get informed when we launch this tool. The goal of this tool is simple: help you make better decisions without stress. Finally, guys, you don't want to invest in a bubble. You want to stay informed with both local and global financial news of companies, both the local and global financial space. And I make use of websites like Business Day, Nairametrics, Bloomberg, Yahoo Finance, Reuters, and local analyst commentaries on YouTube just to get informed on what's happening in the market. And good thing, Nigeria reacts to global events like oil prices, foreign portfolio inflow, global interest rates, and emerging market sentiment. So if you want to stay ahead, you must stay informed by leveraging these news platforms I just talked about. And that's it, my colleagues. If you have watched up to this point, you now understand the Nigerian stock market better than 95% of people investing in it. You understand the engine, you understand how to choose brokers, you understand how to evaluate any stock, you also know how to build a strong portfolio. Aside from that, you now have the exact tools professionals use to stay ahead in the market. Most people invest with confusion, but you now have better clarity. Most people react to the market, you now understand the system behind it. Now listen, if this video gave you clarity, please smash that like button so more Nigerians can get to see this video. Share this video with someone that might learn one or two things that also help their own investment journey. And if you are new here, subscribe to the channel. I make video that helps you think clearly about money, investing, and the Nigerian market, and let's say African market. And don't forget to join my WhatsApp channel using the link in the description and pinned comment. Don't forget to also join the wait list for Affirmatrix so you get notified once we launch. Don't forget to stay sharp, stay safe, and like always, invest wisely. Until next time, Dewo.